Thanks so much for tuning into this earnings conversation with Sandeep Kalra of Persistent. We look forward to this conversation every quarter because we talk to Sandeep about what's happening in the bucket that they're so specialized in and clock in such stellar growth quarter after quarter. And especially at this time when some of the other companies have sounded off bugles of warning, which are very diverse, if you will. So Sandeep, thank you for taking this time out. And for the next 10-15 minutes that we talk, I would love to talk to you as much about Persistent as also about what's happening within the space as well. Let me start with your quarter. The revenue numbers were largely in line. And if I adjust for the one-off expenses that you guys incurred, there was not a very large miss on the other numbers as well. How would you sum up the quarter?
So Neeraj, let me give the high level numbers and then I'll give the color commentary on our summary so that the viewers, get a sense of where we are. So for us, the quarter was a good, healthy, quarter from a growth perspective. We came in at $282.9 million for the quarter. This gives us a sequential growth of 3% quarter on quarter, 17.1% year on year basis. This is on the dollar terms. In rupee terms, this translates into 3% quarter on quarter, 23.6% year on year. Now, coming to the profitability side, the EBIT for the quarter came in at 14.9%. This compares to 15.4% from the last quarter. But there is a seasonality of the visa, expense that comes in this quarter, which contributes to roughly about 40 basis points. And then there are small puts and takes in terms of amortization and that. So from an overall perspective, EBITDA came in tad bit lower. The EBIT came in tad bit lower. From an overall PAT perspective, as you would have noticed, we did a number of events with respect to our $1 billion achievement. And we also rewarded our employees with a small gift. Now, obviously, these are the people who are making our growth happen year over year, quarter over quarter, month over month. And we deserve to reward them as we reward our investors with dividends and so on and so forth. So adjusted for that, our PAT actually grew. With this expense, our PAT came in at 9.9%. If we take that one-time exceptional amount, our operational PAT comes at 11.4%. which gives us a Q-on-Q growth of 5.4% and Y-on-Y growth of 25.2% on the PAT side. Now, coming to the order book for the quarter. The order book for the quarter came in with a TCV of $380.3 million. The new booking TCV was at $237.2 million. So overall, I would say the quarter was good. Now, obviously, we have to keep in mind there is a macroeconomic environment, which is very different than what it was, let's say, 4 quarters, 6 quarters back. If you look at any of our peers, growth and so on, you will figure out that the sector obviously has its own small challenges which are linked with the macroeconomic. So I'll take a pause and I'll be happy to make it a discussion with you.
Okay, I'm trying to get a smaller piece out of the way first. When I was looking at your geographical numbers, right, and I'll come to NA, which is the bulwark for you, but Europe, in your case, this quarter showed a bit of a drop there. Now, is this seasonal? Is this maybe client specific? Or could this be an issue that could large? I mean, it's only 10%, but still, I would just love to understand.
So there's no structural issue. So from that perspective, look, these are puts and takes that happen one quarter or the other. There is nothing to worry in that. From an overall perspective, there's a healthy growth, there's a healthy pipeline, whether it is North America, whether it is Europe, and we are pretty reasonably confident, obviously cautiously optimistic on the growth in all the regions, but there's nothing to worry about in this.
Got it. Now, Sandeep, I know for a lot of people may not even quite know that your model is not necessarily plain Jane IT services, but I'm just trying to understand and compare what you are feeling on the street versus what some of the peers are. Now, it was not a worry when, 1 or 2 or 3 companies came out with slight misses, but a large IT company's con call yesterday spoke a lot about how client conversations are slowing down. Large deals are getting spread out instead of getting executed within a bunched up time as earlier was envisaged. And there is a deferment of sorts in client decision making as well. Now, these are not very pleasant things to hear. I'm just trying to understand, are you sensing something like this in your client conversations as well?
Right. So look, we all live in the same kind of universe. We all look at the same kind of customers, maybe slightly different mix at times. So as far as we are concerned, look, the fact of the matter is if we had to bring in $100 of bookings 1 year back, if we needed a funnel of, let's say, 1.6 to 1.8 times that, today we need more than that because the decision making definitely is getting delayed in certain pockets. Now, that is what we have to deal with. So this is the environment. And so the way we are dealing with it at our company is we are doubling down. We are proactively going back to our customers and prospects, creating the pipeline to be able to support our growth journey. That is what has held us in good, spirit. Did we, have some of the order kind of get delayed? This was also a quarter where the end of the quarter people had taken vacations. July 4th is basically a long weekend, and US is roughly 80% of our business, 78 plus percent. So we are seeing all kinds of these things, but the maturity of any organization, whether it is us or anybody else, is to sense the environment, balance the demand, balance the various equations, and deliver to it.
Okay. So are you leaving it open in that it is not a done deal that these things are materially slowing down, and you will get the proof of the pudding only as the next couple of quarters go behind you, Sandeep?
So from what we are hearing from our discussions with customers, and since I live in the US, I have a fairly active set of conversations at any point in time with the customers. So from customers' perspective, every one of them is expecting the things to improve over the next 1 to 2 quarters. The next 1 2 quarters are tough. If they are tough for our enterprise customers, they are tough for our product customers, the customers that we do product engineering for. And all of them are expecting this to kind of go back up in terms of acceleration 2 to 3 quarters from now. So that is a reality on the ground that we are listening to. But at the same time, there are cost optimization deals that are there. Deals are there on the table. Now it's for every company to understand in their own areas of expertise, how do they morph their pitch, how do they capture more of the market. And I'm proud to say at Persistent, if you look at our last 8 9 quarter journey, we have outperformed the market, not by waiting for RFPs to come our way, but by proactively working with our customers. That's our endeavor. And this is the 13th sequential quarter for us for revenue growth, and 3% revenue growth in this macroeconomic environment by no means is a small task.
No, not at all. Not at all. Nothing to take away from there. For sure. Just trying to understand, Sandeep, and it may well be the nature of the game, because in tough times for customers, you have to go out and try and give them a helping hand as well. For you to be able to get the kind of deals that you're getting even now, are you having to, kind of backtrack a little bit on pricing that you would otherwise be able to charge because they are in a tough spot?
So I don't think pricing is necessarily the biggest, thing. Pricing pressure is there in some of the larger customers where it is multi, vendor kind of an environment. There are people like us, then there are the bigger, peers of ours and so on. So the pricing pressure happens more in those kind of environments. When we are going with a proactive pitch, when we have a, clear understanding of what the customer is trying to achieve, when we are crafting a 3 year to 5 year kind of a deal construct, when we are helping them optimize, pricing is not the biggest pressure. What happens in those kind of deals is we are at times normalizing the savings. We are passing on savings upfront, and we are optimizing it over a period of time. That puts a little bit of pressure on profitability. But when you run a P&L of $1 billion, these are puts and takes you will have to do. So those are where your grit of managing your profitability and your deals that are new with lower profitability sometimes versus deals that are getting into higher profitability that you booked over the last several quarters, all of that balances out. So no pricing per se, but better management of overall P&L.
Okay, point well taken. The other interesting piece that I thought was, and please correct me if I'm wrong here, but the way NA did not show issues for you, BFSI, which has been a pain point for some customers, has not been an issue for you. But there has been a bit of a pullback in this quarter on your largest vertical. Now, what's happening in healthcare?
Right. So in healthcare, look, we are exposed to different constituents within healthcare. So healthcare for us is on one side, instrumentation companies and medical device companies. Some of these companies and the rest of the things are pharma, payer and provider. Some of the medical device instrumentation companies, etc., had a big leg up in the COVID period. So when you look at all the companies that are exposed to the COVID tests, various parts of that value chain, they are now seeing a decline in their revenues. With their revenue declining, some of them are optimizing their own operation in the new reality. So they spent more when they were seeing an uptick. And so some of our constituents are optimizing their spend, including their spend with us. But overall, if you look at our order books, one of the largest deals that we won, which is fairly bigger than $50 million TCV, is in the healthcare space. It's with a payer kind of a company. And so we are reasonably confident it's a small blip. It'll come back. It's like you're managing a portfolio of businesses. There's nothing to worry in that. We know exactly where the issue is and we know how it is getting fixed.
Sandeep, as somebody who's shepherding such a large ship, right? How do you think of the deal win momentum? Because obviously it will slow down. People who are not in your seat might think of it as a much larger issue than what you might. So I'm just trying to get inside your head and try and understand What do you think when you think of deal win momentum in an environment like this?
Right. So yeah, from an outside perspective, I can understand and I can empathize with people who think a little bit of order wins here or there make a lot of difference. But when we look at ourselves, look, the fact of the matter is there is a healthy pipeline. There is a execution engine that we have in place, which is delivered very well for the last 13 plus quarters. We are confident. Small things here, there, they will keep happening. And those adjusted for those, we have the confidence. We are in a good spot compared to the environment we are in. Compared to 5-6 quarters back where we had 5 sequential quarters of 9% growth, it was a different environment. Comparing apples and oranges doesn't yield good results. But if you compare us with the environment that has been handed over to us over the quarters, if you compare us with the industry and the peer growth, I am relatively very confident we are in good spot. Obviously, we'll have to be at it and execute to it.
That's what my final question, I may have missed this, but have you kind of given any kind of color as to what you would do for the year? Or is it too fluid an environment to try and make such a prediction?
So Neeraj, we don't give forward-looking guidance at
Agreed.
all. So it's not about the environment or not. We don't give forward-looking guidance. All I can say is we are at it. We have a track record of 13 plus quarters of sequential growth and profitability either at a stable or a healthy growth. There are quarters where there will be, a few things here, there. So we are relatively confident. The two other things that I want to point out for you and your viewers. We have not delayed any people joining. Whether it was the freshers that we took earlier, whether it will be the freshers that we'll take in the future. We have already gone ahead and given the salary hikes that were due to our employees. We are not going to manage our profitability by cutting the stomachs of our employees. We have given 7.5% average in India. We have given 3.5 to 4%, depending on which geography we are talking about, abroad. And look, all of that coupled with the fact that we paid 109% minimum corporate performance bonus for the last year, which was paid in the quarter gone by. We are confident of our performance. We'll stick it in come, a good macro or a bad macro. And we are poised to deliver relatively well in whatever environment is given to us.
Okay. The second point being, sorry, I thought you said you wanted to mention two things.
Yeah. So basically the employees, we have not deferred any joining and we will not defer any joining. Second is we paid all the bonuses. We have done all the increases. So from that perspective, one doesn't do all this if one is trying to artificially manage the profitability.
Point well taken. Sandeep, thank you for taking the time out and giving us some color. It's good to hear a confident CEO in these tough times, and which is very warranted. So thanks for taking the time out.
Pleasure talking to you. Thank you.
Likewise. And viewers, thanks for tuning in.